Efforts by the capital market regulator to deepen the stock market may begin to yield fruits as the derivatives markets are about to open on the floors of the Nigerian exchange. Now, recently, the Securities and Exchange Commission approved 7 stock futures contracts to run as pioneers in the market, which includes Dangote Cement stock futures, Zenith Bank futures, GT Bank futures, MTN futures, among others. There are also moves by the Nigerian exchange to regionalize the exchange-traded funds market in West African economy. Well, let's look at this very important topic, and I have the right person joining me via Skype. Is Mr. Jude Chiemeka. He's the division held trading business at the Nigerian Exchange Limited. Thank you very much for your time. Good afternoon.
Good afternoon. It's a pleasure to be here. Thank you for having us.
Yes, it's always good to have people from the NGX in the house. Now, let's start with speaking specifically to the approval from SEC for the 7 derivative contracts. Tell us what this really means for the market and what investors should understand.
All right, thank you very much for that question. It means that we're really close to the launch of the product, as this is one of the many approvals we have received from the SEC. The desire to launch derivatives product in the market is one of the many initiatives the NGX is committed to as we strive to deepen our market by introducing products that are tradable, that's also in line with international stock exchanges, given the fact that we're also a member of World Federation of Exchanges. So this quest started in 2014. But at that time, there were certain things within even the CAMA, Companies and Allied Matters Act, that didn't allow for the trading of these derivatives. The ISA also didn't say much about the derivatives, but all of that over the years have been dealt with. I think the last was the 2020 provisions, the netting provisions that were made available in the CAMA. So that gave the legal framework for the trading of these derivatives. So with this approval, we can now progress to launch the product and deepen the market, as you stated initially.
All right, deepening the market always sounding very interesting to me, but I'm also looking at the possible impact directly after this is launched on the market. Before we move further, can you take us through that?
Derivatives certainly will instruments that derive their values, their instruments that derive their underlying value from other assets. Could be equities, fixed income, bonds, commodities, or FX. But in this case, we're starting with our index features as well as single stock features, and we will then progress based on the demand from the investor community. All right. It will also help to provide better pricing in terms of price discovery for positions in the market. Certainly, it will allow those who are trading other products in the market, because we do have securities lending, we have margin trading, and so with this introduction of derivatives, it allows people to hedge their positions and allow them to hedge all the investment decisions they have made in line with their investment objectives. So it more or less will also help boost and deepen the liquidity pool, especially for the underlying assets that are involved in this case. And if you look at the stocks features, those are the most liquid stocks in the market, and we'll continue to see the deepening of that pool. It's also important to mention, especially for the investors, in the cash equities market that we currently run, you would have to put down all the cash for any position you would like to take. But with the introduction of derivatives contracts, you should be able to take a position without having necessarily put it down all the cash required. So it becomes a cheaper way of also taking positions in the markets.
Now, let's now look at timelines. What timelines are we holding for these derivatives to actually commence?
Yes, there are still a few external dependencies, but by and large, given all the various approvals, bearing in mind that for a thriving derivatives market, there are certain things that are supposed to be in place, and all those things are in place. For instance, in terms of the market efficiency, we do have a trading system that is smart. We also have the smart surveillance system that will allow the market to be policed effectively. The trading system is NASDAQ. It's a world-class trading engine configured, so the efficiency of the market process is guaranteed. There's also the element of financial stability as well as integrity, which allows for the risk to be managed through a central counterparty. All of that arrangement is in place in terms of the architecture, following the approval that SEC has also given to the clearinghouse. And then the last is around investor protection and fairness, which is really hinged on investor education. We do have specialized form of trainings that we're offering in the market, and we continue to partner with international partners that we have to ensure that investors have the right knowledge to take advantage of this investment instrument.
All right, moving forward, let's now talk about involvement of the investing public. How much of their involvement can we trust in these developments?
Yes, in terms of that, the rules establishing the trading of derivatives, both from the SEC as well as the exchange, clearly protects investors, allowing them to trade in a fair and in a transparent platform within those rules. And there's a lot of sessions going on. We started this whole conversation in 2014. In the last couple of months, we've had series of various engagements around all the things that they need to put in place, and also the sort of knowledge they need to have to take advantage of this product. So the investor communities, both on the retail and largely on the institutional side, we are engaging aggressively, and we do believe that with the collaboration of international partners, they will have the best-in-class type of knowledge that they need to facilitate their involvement in the trading of this instrument. So the investors are really well protected, given the transparency of the market architecture. And we must commend the Securities and Exchange Commission for all the various heavy liftings they have done to ensure that investors are well protected in the rules that they have rolled out.
Also thinking of plans to educate local investors on how to derive the full benefits of the ETDs. That's talking about the exchange traded funds. Are there any plans to make that happen?
Yes, we do have significant plans. One of them is this media coverage, just ensuring that people are even aware of the existence of this product and what that means. We do also have specialized trainings that we provide through our X Academy, which is our knowledge platform at the exchange, working with international experts to ensure that they get the right sort of information and education required to take advantage of this instrument. There are also various collaborations that we're working in terms of even the trading license holders, who will be the stockbrokers in this case, ensuring that they have the right minimum operating standards in terms of the technology that they need to drive this initiative. Bearing in mind that the exchange itself is largely driven by technology. So this product will definitely hinge on technology in order for them to appreciate the sort of technology they need, and also the sort of knowledge that they require to maximize the use of these products to de-risk essentially their portfolios, hedge, and also take positions without putting down all the capital required for a cash equities play.
Now, knowing that countries defend their interests and put guidelines to almost everything, are West African countries in line with Nigeria on regional derivative investments?
We should look at the West African market. Nigeria clearly stands out, and we have driven all these sort of market integration, whether it's the WACMI initiative. I mean, the first trade that was done there was between Ghana and Nigeria. So that collaboration obviously will extend to other products that are being traded on the Nigerian platform. And it's a conversation that even transcends beyond just West Africa, but also across Africa, through the Association of Exchanges initiative that is being funded by the African Development Bank to ensure that the technology to integrate markets, allow investors to take advantage despite their geographies. It's ongoing and it's going well, and we'll see this as one of those products that will also be traded on that particular platform or initiatives.
All right, before I let you go, what more should we be expecting? A lot is happening at the exchange at the moment, and investors and even shareholders, everybody wants to hear what's playing out. What more should we expect as we move on in 2021?
Well, if you look at the performance of the exchange in terms of the all-share index, which was over 50%, which made it one of the best performing markets, you clearly understand that Nigeria still has a lot of potential. The market itself is grossly undervalued, and the reason why you see that is because on the FX side, the international investors who play in the market have been having liquidity challenges on the FX side. And the portfolio managers, the local institutional portfolio managers, are leaning more towards fixed income. And so what you find is a really undervalued market. But we believe that with time, that will normalize. And if you look at research that are coming out from some of the brokerage houses, you will see that there's a lot of upside potential in the market, especially around sectors that have taken a huge beating. If you look at our PE, in comparison to other frontier markets, it's very decent. Look at the dividend yield, it's really very attractive. So it's a good time for investors to begin to really look at the market, irrespective of this liquidity challenge. Capital market is usually a long-term play, and with time, the FX situation will certainly be corrected, and it will allow investors who have been able to take advantage of these low-priced scenarios to maximize the returns in the long run for their portfolios.
All right, let me get your view on this before I also let you go. Staying riding on the back of the points you just made. Yes, trading has been up and down. We've seen that in recent times. What more do you think investors need? We need them to come in one way or the other to invest in Africa's most populous nation. But we have macroeconomic issues that are, of course, affecting us. Inflation is right there, insecurity and all of this. So in all of this, where do you put the market, or where do you place the market with all of the projections we are having, even from IMF and the World Bank?
Our market remains largely attractive. I mean, the key fundamental really is the increase in local domestic participation on the market, and that is what this exchange is really focusing on now, just to ensure that the domestic institutional investors are well invested in the market, that will have more listings. If you look at the history of listings, it's always been driven by some form of regulation or the other. So we expect all of that to also be in play to allow more listings to occur, just to give investors more value for their investment. But around technology, which is key to drive retail investor participation, if you look at the number of people today that have BVN, it's about 48 million or thereabout. And if you look at the configuration of the number of people that play in the market, it's less than 6 million people. So there's a lot of room for growth in that area. We're collaborating with the telcos as well to ensure that we increase retail participation in the market. We believe that with the use of technology in a seamless manner, we should be able to see more investor participation in the market, deepen domestic local play. And that in itself will also lead to the attraction of international play. Liquidity, they always say, begets liquidity. So if your house is in order, then it's easier to attract investors into your markets.
Well, that's a real good way to live it. Thank you very much for spending your afternoon with us. We really appreciate this. I'll be speaking to Mr. Joe Chiemeka, Divisional Head Trading Business at the Nigerian Exchange. Enjoy the rest of your day.
Thank you so much.